2023 is rapidly becoming the year of the spot Bitcoin ETF. After refusals for VanEck, Valkyrie and Grayscale, it looks like BlackRock has finally broken through. The spot ETF is going to be insanely bullish for Bitcoin price. It removes many of the barriers that have prevented major investors from entering crypto. Many investors are interested in Bitcoin but find the process of buying and storing cryptocurrency complicated and unfamiliar. A Bitcoin ETF would offer a familiar investment vehicle, access through their existing brokerage accounts, as well as making their investments subject to regulatory oversight. This means that investors are getting a sense of security and protection that they just haven't been getting in crypto since the FTX collapse. All of this means a Bitcoin ETF could attract institutional investors and traditional financial institutions that are hesitant to directly invest in cryptocurrencies. This could potentially lead to massively increased mainstream adoption and acceptance as Bitcoin is deemed a legitimate asset class. We should also see a significant boost in volume. This liquidity can be beneficial for both short-term and long-term investors. We've already seen the market cap expand by 120 billion since the BlackRock spot ETF announcement. We saw the market move on the confirmation of the BlackRock ETF application, and this has gathered pace following the news that Invesco and WisdomTree have also submitted spot ETF applications, as well as rumours about Fidelity getting involved. Now, the rumours around Fidelity might have been slightly wide of the mark, and perhaps we're being confused with the launch of their own crypto exchange, EDX, today. Partnered with Citadel and Charles Schwab, their exchange offers Bitcoin, Bitcoin Cash, Ethereum, and Litecoin, which explains the pump in those products. And I'd imagine is the reason why Coinbase and Binance are having such a rough time with the media. This all looks like a very deliberate and orchestrated move, pulling crypto investing under the control of the regulators and their friends in traditional finance, supported by, again, their friends in the media, all at the expense of Binance and Coinbase. Yesterday we anticipated price breaking this 28.2k resistance. We've now broken through that and are now looking at the next points of potential resistance, with 30,000 being a typical psychological resistance, as well as 31,000, which is where we peaked on our last pump. If we fail to break out through either of these two resistance points, I think that we'll find support back at 28,200. However, given the hype around the ETF applications, I think that we're going to see a continued push up in price. Interestingly, we can see that this move is being driven by actual Bitcoin accumulation rather than short liquidation, which seems to tie into the narrative that Bitcoin is really set to take the next leg up in price. And because of this, my long target is here at 35,800, which is the top of this unfilled CME gap from back in May 2022. Thanks for watching. Don't forget to join the free Discord link below for trade signals, news, and crypto chat. It'd be great to have you there. Comment below if you've got any questions or comments. Thanks.